Just looking at the news flow out on the day, we had Vodacom out with a trading update, and not a bad trading update from the cell phone operator.
Not bad at all. They came in just at the lower end of what consensus was expecting, but I think under the conditions a good result, and we look forward to the results that will come out on the, I think it's the 8th of November.
They say they're expecting first half profit to rise by 40%, but that's after taking out the once-off items that impacted the prior set of results. Is that correct?
That's correct. Key things to be watching in the results will be margins and how those are how those have been affected in quite a mature market that they're operating in, and then secondly the data and the interconnect fees. And
now with the launch of Telkom Mobile, Asia, is that going to have some impact on market share in this territory? I know they're aggressively going after 15% of the mobile space in South Africa.
I think Telkom has a compelling offering because of their landline business, and they'll be able to find some synergies to take to their clients, and they already have existing clients. The other late entrants to the market, such as Cell C and Virgin Mobile, have really struggled to gain traction because of the dominance of MTN and Vodacom. But going forward, it does look like there's going to be increased competition in what is already a rather saturated market. And that increased competition will probably result in lower margins for all the operators.
Vodacom today closing at 67.90 Rand, up 1/3%. Looking at PPC, that stock also out with a trading update, saying that headline earnings per share would be between 20 and 30% higher than on the prior year. Thoughts on PPC? This is a stock that has traded sideways for as long as I can remember sitting on the CNBC news desk.
It has traded sideways. It does pay a fairly solid dividend, though. It's on a dividend yield of 6%. And for clients who are not very keen for the risk but would like to capture some income, it does provide a space in some people's portfolio. On a normalized basis, their earnings are actually going to be down as much as 10%, and that's because they had some once-off adjustments because of their BE deal as well last year. So it's an interesting result. We look forward to getting more details on that, and I think it confirms what we've already seen in the construction stocks as they've released their results over the last 2 months, and that things are slowing down in that construction sector, and we need to see how volumes are being affected going forward.
Talk to me about the news out of China. They don't have a scheduled MPC, so any movement on interest rates is always pretty much a surprise to the market, and we're seeing this 0.25% hike on Chinese interest rates. Obviously, the effect will be to allow the yuan to appreciate. The US dollar seems to have found some traction in the face of this news, but we've got the Dow Jones Industrial Average selling off to the tune of 1%.
Yes, they don't have a set scheduled meeting for their MPC. They do have inflation data coming out tomorrow, and I think they've primed the market ahead of the inflation data with this announcement. Possibly the inflation data will be slightly more than what's anticipated, and what we're seeing in the Chinese economy is a rigorously growing economy with inflation increasing, especially because their currency is pegged to the dollar. The dollar has weakened substantially over the last few weeks, and that will increase inflation pressures within the economy. So this is a small move upwards. I think it's to be expected, especially considering how well the economy is performing at the moment.
Nedbank, finally some word out of HSBC saying that they walked away from the Nedbank deal because the bank failed to meet its strict acquisition criteria, and that's according to HSBC spokesperson Paul Harris. Initially, I thought it was FirstRand Paul Harris, and I thought, what is he doing commenting on HSBC's stance around Nedbank? But it is definitely HSBC's spokesperson. Your thoughts around this?
Going back into the history of HSBC, at the early part of the decade, they made an acquisition in the US I think it was Household, which was a financial target that they had. It really ended in disaster for them as the mortgage market overheated, and they had to write off a considerable amount of the money that they'd invested in that business. Considering that history, it's understood that HSBC does have some criteria that they look for. In that report, they didn't discuss what criteria that is, but considering that they've already burnt their fingers, it's understandable the approach that they're taking. one has to wonder whether perhaps they're being a little too conservative. Nedbank, I think, is a wholly different value proposition, and considering the entry into Africa, perhaps they're being a little too conservative.
Now with the 6% fall that we saw on Friday in Nedbank's share price, Old Mutual fell 5% on Friday as well. Is there value at these levels? 136 Rand 50 is where Nedbank closed today, down 1/3%.
After the talks began between HSBC, Old Mutual and Nedbank, we placed a fully valued on Nedbank. We thought that it was trading at a premium to the rest of the banks. After this announcement, it has fallen. We now have upgraded that to a hold. So in this situation, we don't think it's a screaming buy. It's actually trading just slightly above what the rest of the banks are trading at. And so if it gets down to closer to 130 Rand or below that, I think we'd be upgrading our recommendation there.